Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday the 4th of June. It does seem as though we have a little degree of stabilisation in markets. There's been a significant move in previous sessions into safe haven plays out of the dollar and out of equities, and we can see the fact that look at bond yields, for example, the sharp move to the downside on bond yields. Those 10-year Treasury yields, which were 2.6% back in mid-late April, and now just 6 weeks later, 50 basis points below that. Similarly, on the 2-year Treasury yields, actually even accelerating to the downside, even more than the 10-year. So actually the 2 to 10 spread is actually pushed out, even though I might add that the 3-month 10-year spread has gone ever more into negative territory, so inverting at that point in the yield curve, 25 basis points at the moment. But it's interesting that that has really impacted the dollar yesterday. Certainly in the last couple of sessions, actually, we've seen the dollar under significant pressure. But it'll be interesting to see if that starts to dissipate, because we've seen that although the euro has climbed, and I'll talk about how the impact on that on the charts in a little while, 1265 is certainly a key level to watch there. We've also seen gold breaking out above 1324. That was the March high, 1324. That breakout seems to be confirming today. And also we've seen sterling dollar starting to pick up. But how long can these rallies go? Certainly if those bond yields start to turn around a bit, and they are starting to show little signs of stability, we could see a bit of a turnaround, because there's been such a knee-jerk reaction out away in all across these markets that you could quite easily see some unwinding moves. Already we're starting to see equities just starting to stabilise a little bit. We've got US futures about 0.3% higher on the S&P 500 futures. We've started to see oil, which is just beginning to stabilise a touch. You can see that on the WTI there, that recent selling pressure is just starting to stabilise a bit. Is that going to engage a bit of a recovery? So there's certainly a few question marks as to whether this move that we've seen in recent days is going to continue. Now, overnight we've had a rate cut from the Reserve Bank of Australia. That was fully expected by the market, and it made no real reaction on the Aussie dollar at all. So basically flat on the day on the Aussie. But generally speaking, it's interesting to see markets stabilising a little bit after some recent sharp moves that we've seen. That's VIX volatility, which again shows a degree of stabilisation after rising considerably over the last 2 or 3 weeks. Now, in terms of data points today, we've got the UK construction PMI at 9:30 and the Eurozone inflation data at 10 o'clock. So UK construction PMI is, construction is only about 6-7% of the UK economy, so it doesn't have a big impact. But certainly if it went into contraction territory, that would be manufacturing and construction, both in contraction. That would be, contraction is below 50. That's at 9:30 today. And then we're looking out for Eurozone inflation, which on a headline basis is expected to come back to 1.3%. On a core basis, expected to come back to 0.9%. Then in the afternoon, we also need to look out for the comments of Fed Chair Powell. So obviously after the recent sharp moves on markets will be certainly looking out for what Powell comes out with, because James Bullard suggested that a rate cut was possible yesterday. He said that. Now, Bullard is very dovish, certainly on the dovish end of the scale on the Fed anyway, and if some of the more centrists take that view as well, that would be very interesting move that we could see on markets. But Fed Chair Powell speaks this afternoon, so watch out for that. So my chart today is silver, and what we have seen is silver and gold breaking out sharply higher. That silver downtrend of the last 3 or 4 months, 3 months or so, has been broken now by 4 strong bull candles in a row, moving above the 1464 level of resistance. That completed a small base pattern. That is the first time that we've really seen a recovery above a lower high. First time we've seen that within the downtrend. So is that signaling a bit of a base pattern? Well, the implied target of that small base pattern is $15. And that would then take you above 1490, which is a long-term pivot. So that is the next barrier that you need to overcome on silver. But then you need to look out for 15 figure to 1510. That is the next basis of resistance. 15 figure being that base pattern target, a bit of a pivot band, but 1510 again, sort of 10 cents or so of resistance there. That would be the main resistance that you'd need to see overcome for the bulls to really gain control. But look at this RSI, 54. That's at a 3-month high. MACD lines and stochastics both starting to accelerate higher, so there is recovery prospects on silver now. So this is an interesting one to watch. So weakness being bought into, that breakout is supportive at 1464, 1468 today's low before finding a bit of support, pulling high. So it's looking okay in terms of a recovery, and I wish you good luck in your trading today, and I'll speak to you later.